We live in a fantasy world now. Reality has been destroyed.
This is the time that we really need to pay attention.
The probabilities are overwhelmingly on gold's side.
That is the best environment to see gold increase its value.
Welcome to Palisades Gold Radio. I'm your host, Tom Bodrivics. Joining me today, it's great to have him back, David Morgan from themorganreport.com. Thanks for joining me today, David.
Tom, it's good to be back. It's been a while. Thank you.
Absolutely, it has. And that's why it's great to have a good recap at the beginning of the year here. And I just wanted to maybe start by getting your thoughts on, kind of give us some perspective of where we are in this, let's say, silver cycle. Are we in the start of this third leg up here?
Yes. In fact, the data has really confirmed that. Most markets go in, and this is the basic Elliott wave. I'm not a huge student of the Elliott wave, but there's basically 3 legs up and 2 legs down. So you get the first leg up, and then one down, and you get another one up, then another one down, and then you get the last leg up. And that leg is usually the most significant in price appreciation, not necessarily that long in time. So actually, it was Jeff Christian that said it years ago at a conference we were both attending, and he said 90% of the move comes in the last 10% of the time. And that really stuck with me. And so I went back home and did the, third grade math, and sure enough, and it depends where you start the starting line and when you end it. And, but still just being as objective as possible, it was something like 88% of the move came in 7% of the time in the 1980 bull market in silver. You could have been the staunchest silver bull in 1965 when it was taken out of circulation, bought several bags of silver and held it from 1965 to January 1979, 14 years or so, and made some real profit, but nothing substantial. It would have gone from the $1.29 monetary value to $6 Federal Reserve notes. But if you were a rank amateur and didn't know anything about markets and just had a hunch that, I think I'll get in the silver market for a year, and bought at the all-time high of 6 and waited a year, it was an 800% increase. It went from 6 to 50. So, and that, to be honest, 50 was a one-day event. It didn't stay at 50 for a month or two. Although, to be totally fair, the average price for 1980 was above 20 for the year. So if you take all the squiggles and the ups and downs and the Black Thursday and everything that happened that year, the average price was above 20, which is a far cry from 6 on anybody's book. So back to you, Tom.
Well, David, what are some of the, let's say, confirming factors that are really kind of showing us that this is where we're at? Can we look to something like the silver ETF demand in the last year as one of those things?
Absolutely. You got ahead of me, and that's fine. I love it. That would be number one. The most important fact is the fact. What's the physical demand? And the physical demand in the ETFs has been unprecedented in 2020. Someone's clearly got clear vision, seeing silver for what it is on the investment demand side. So we set a record for the amount of silver that went into the ETFs. On top of that, another confirming factor, which I'm anticipating in the next question, would be the gold-silver ratio. We went from a high that's only been achieved once or twice in recorded history of about 125 to 1 down to roughly the low 70s to 1 as we're doing the interview. So silver's clearly outperformed gold from that metric. And that's an important addition to the analysis, that silver needs to outperform gold in the last leg of the bull market. And it did in 2020. I expect it will this year. I think it will in 2022 and 2023. Where does this market end? No one knows. Is it another 10 years? I doubt it. I think it's probably another 2 or 3. But again, we'll see.
So, David, how do you go about looking at the silver price to separate these daily fluctuations that, silver is very well known for? Is silver undervalued as you see it right now at the current price level of $26 to $27 an ounce?
Yeah, that's a really good question. And, I'm not going to walk a tightrope because no matter what I say, it's going to upset almost anyone. But there's really 2 ways to look at the silver price. Well, there's several, but I'm going to break it down in the most basic. One, it's a commodity. So if you look at wheat or soybean meal or soybeans or soybean oil or cotton, cocoa, or coffee, you look at those commodities as that, meaning that the real reason that the futures market ever started was for the farmers to be able to hedge their product and make a profit. So it was based on what the true cost was to grow wheat. And that was roughly, above or beyond what the farmer actually put into the ground work-wise and money-wise to produce it. So that's how a commodity price is set. It's basically the cost of production plus some margin. And that margin can get excessive at times, but most of the time it's pretty close to the means of production total cost. And that's how both silver and gold have been priced for quite a while. But when gold and silver are money, there's basically an infinite price in a fiat system because you can print, pieces of paper to infinity. I mean, we've added roughly 22% to the money supply of the US dollar this year. And it took us, almost 200 years, well, you say from the Fed founding over 100 years to get from where we were to in the $20 trillion mark. And here we are adding, 22%. I mean, it's insane, not counting the 20 trillion that's unaccounted for that I have to add from Professor Skidmore and the wonderful Catherine Austin-Fitts work. So we're drowning in debt. So money itself is determined in the market what the value is, or we could call it the price. So from that aspect, there's several ways to look at it. If you look at it from the Jim Rickard's point of view for gold, you could come out with a price of, 15,000. He just said on the Greg Hunter show I watched this morning. And I do the math a little differently, but I think it's sound. It's basically, instead of taking all the money in the central banks worldwide, using the amount of gold that's purportedly in the U.S. system and dividing, getting a number and taking 40%. That's fine. I have nothing wrong with Jim's analysis. Mine is more basic. What's the U.S. price of gold? It's the M1. It's the base money supply divided by the amount. It's dollars per ounce, and then you divide that by how many ounces, and you come out with about the same number, about 15,000. So there's that. Now, what's silver worth? Well, since it's been demonetized well before the founding of the Fed, you can argue it's not money, and a lot of people do. On the other hand, the word silver and the word money is synonymous in all the Romance languages. So it's pretty hard to tell somebody in Mexico that silver isn't money. They don't know what you're saying. We'd be talking to you, Tom, and saying, you know what? I'm telling you something you don't know. Money isn't money. You know that? It's not money. Money is not money. I mean, that's basically what you would be saying to them. Mm-hmm. But anyway, I digress. So if you look at the historic ratio, the monetary ratio, it's 15 to 1. So you could take that 15,000 divided by 15 and come out with $1,000 silver. Is that the correct price? I don't know. But so you've got a lot of variables. I would say that both gold and silver are mispriced because their highest functions through all of history have been money. Now, silver is essential to almost everything in a technological society. So it's got a dual demand. You've got kind of like an automatic stock buyback program with silver that regardless of how good or bad the times are, you might see it up and down as far as the amount of industrial demand, but it really does not vary that much. Not as much as people might think with something that's not needed, like another TV screen, for example. But in silver, there's still a steady demand. And then you add, jewelry demand and silverware on top of that. But basically it boils down to industrial and investment demand.
Well, that's exactly where I wanted to go next, David, was to ask you how the supply-demand picture has really changed in this past year. Now we have the benefit of looking at 2020, the entire thing in the rearview mirror. So tell us a bit more about how that historical demand picture especially has really changed over the last year.
Yeah, well, the first part is the supply side, and that was, with the illness, there was a shutdown in a lot of the main areas that produce silver, South America primarily. And at that time, there was about a estimate of about 6% degradation in overall supply on an annual basis. The Silver Institute just put out a preliminary, I forget the number, I think it was less than that, but I'm going to just stay with 6%. the last few years, the silver supply, regardless of the illness, has been diminishing slightly, like in the 1%, 2% type of range. So that's the supply side. But you asked a broader question than that, Tom. So on the demand side, demand fell off in that preliminary outlook that the Silver Institute just published a few weeks ago. They showed where, jewelry demand was off, silverware demand was off, but the ETF demand, as we already discussed, was through the roof. And a lot of the industrial demands were off slightly, measurably. But the investment demand, and I've always said and always will say that it's any market moves at the margin, and the margin for silver is its store of value function, its monetary function, its investment function, its protection of wealth or wealth appreciation. And again, there's a subset of that means that there's these, stock buyback, as we referred to it, meaning that there's always a demand that doesn't go away. And I might dwell on that a little further. You asked me over the last year, but if I could elaborate to the last 2 decades, if you go back to 2000, the industrial demand was about 35% of the market. And at that time, we were mining about 550 million ounces on an annual basis. Today, the industrial demand that's fallen off, it used to be 60%, it's always 50%, half of the market now. So it's gone from 35% 20 years ago to 50%. At the same time, the production has gone from 550 million ounces to 850 million ounces. So think about that, Tom and viewers. Let's say that the silver supply was static at 550 million ounces. It's not, it's gone up, it's a lot of demand, and there's, it's economics. People are going to make money mining silver, they're going to mine it. But at 550, so at 60% of the market, at 850, let's do the numbers real quick. So we'll round it to 800. So that's 425 million ounces. And if we're still at 550 million, you'd be at about 125 million ounces, with all you would have available for silverware, jewelry, and investment demand. And, I'm not saying, I'm just doing a thought experiment here, but what I think was interesting, if you took that trend and continued it on, and nothing goes linear, you've got to do at least squares linear regression and find what the curve looks like. But regardless, we're going to see where, if that trend continued, you could in theory get to a point where the industrial demand starts to push on the investment demand and vice versa. And I actually think as this monetary demand continues, let's say it continues into 2021, what just happened as a fact in 2020, that year alone could put some of the industrial demand into jeopardy, meaning that someone like a Samsung or Sony or Mitsubishi or whomever starts to look at their supply and say, why, talk to the logistics department. Hey, why is it taking 8 weeks to get our raw silver in? Oh, well, there's a slowdown in supply. Why is that? Because these guys, a lot of them don't have a clue. So there's that. Excuse me. There's that. I think that's part of my thinking anyway, on why a dual demand will actually work in silver's favor.
Absolutely, David. So can you highlight for us some of the new products that might spur more of this industrial demand? Let's say there's new technology that I know that you recently highlighted, this new silver battery that has come out that could be the future of electric car powered, or the future of how to power electric cars. So give us a couple of examples of where that new industrial demand might come from as well.
Yeah, there's actually been a few, let's say, uses of silver that were extreme and very important that could basically, for lack of a better term, corner the silver market. One was the properties it has as a preservative on wood. And this was floated out, I'm going to guess, 15 years ago. Never happened. Copper sulfate was used instead. But if you did the math on it, which I did, and did every, wood dock on the planet, all the playgrounds on the planet, on every place where you would or could use it, it would take a great deal of silver. Superconductivity. That's another area where you could actually end up using a lot of silver, even though on a pure unit basis, a foot of superconducting cable is, minuscule if you think about how many, millions of feet, billions of feet you would need in superconductivity on a globe that is powered that way. It's significant. But on the battery thing, silver still produces the best battery from my research. I'm sure I could get arguments from the graphene crowd and others, and I'm not going to say I know it all. I'm not sure. What I will say is if you look at the facts, the mil specs are all using as advanced or highest grade that they can, and almost all military functions are using silver batteries. Using silver batteries for your if you have a hearing aid. Why? I mean, all these things that require efficiency, function, small scale, high demand, reliability, all that, those batteries usually use silver. So in the EV market, the potential exists that somebody somewhere at some time will be using the Samsung design that I did speak about a few weeks ago. And you can look it up. There's more research to be done, but I think that could be a replacement. I think what's interesting, and I've thought about this, and I'm not saying I'm right, but being a guy, especially in my younger days, not so much now. Cars were a big part of it, and so you might see someone hacking their, I won't name a brand, but an EV of some type that uses lithium, pulling that out and putting in silver batteries because the range is better. Or maybe the power to weight ratio would be 15% better, so they get better acceleration or whatever. I could see that happening. I wouldn't say it'd be pervasive or take it on, but no, there's that, and there's a lot of others that are very small that may or may not add up. But with this illness situation, there's already, and this is nothing new to you, Tom, but there's silver used in this mask situation because of its biocidal properties. And there's more silver used in clothing, especially athletic clothing, all the time. And then there's this smart clothing where basically it can take a function of, what is your heart rate, what's your blood pressure, what's your respiratory function look like, and all this stuff. All that stuff uses silver. Now, is it in such a huge quantity that it's going to dent the silver market? Not really. But it does prove the essence of the silver market, that there's more patents put on the silver use on an annual basis over every commodity except for oil. Oil does much more, but other than oil, silver's number 2.
That's really interesting. And this shirt that I'm wearing actually has silver impregnated fabric in it as well. So David, as we're speaking exactly about that, what do you think is needed for the average investor to get interested in silver? Can you give us an example of something that could help bring silver into the consciousness of the general public a little bit more?
It's always education, Tom. I think that, we're undereducated. It's sort of like, and I'll speak as an American, that, we're pretty much overfed and undernourished. I think it's the same in the educational system. No one's really taught about the banking system anytime. Even I have a finance degree, and, they touch on it basically. But since I was self-taught as an Austrian before I ever went to get that degree, I knew a lot more than even some of the professors as far as how the banking system actually operates. So most people are too busy making a living to take the time to understand what's going on. Money's too complicated for them. All they know is, they've got a checking account, they've got an ATM card. They use these pieces of paper occasionally. Usually it's plastic. And as long as they got enough of it to get by, that's all they think about. And I'm not going to slight anybody for that. However, if really we were able to educate enough people that all currency systems fail, we are in a currency crisis currently. Bitcoin is a good example of a run to safety. The run to safety will probably be complemented by a run to gold and a spillover and a run to silver. But this will be more emotionally driven than intellectually driven. A lot of people that will buy silver at the end won't be buying it because they understand monetary history. They know what true inflation does. They know what a depreciating currency is going to do to their lives going forward. They won't know any of that thing. What they'll know is that silver's moving higher. Their brother-in-law bought it. He's making quote unquote money because even though it's an element and it doesn't change, the price of it changes. And he's worried about the fact that the dollar's not going to buy anything in the next 6 months. So he will do it as well. And that sort of feeds on itself. So it'll be a velocity change. There'll be a run to gold and a run to silver, in my view, like we've never seen before. And the reason I'd say that with some authority is we've never had the internet during a currency crisis before. So With a lot of the stalwarts, my peer group, some, better than I, certainly the Jim Rickards and, Axel Merckx. I mean, there's so many I could name, Kaiser. I mean, there's so many that talk on this, subject, but they have a big following, and gold speaks for itself. And once it does, it sort of roars. And once it roars, that's going to be the shot heard around the world, I believe, which means you're going to see a significant run to not only the cryptos. I think you'll see them running into the precious metals as well.
And maybe something that could play into that is people feeling like maybe they missed out on the, let's say, Bitcoin train and be able to jump into the precious metals, hopefully, right?
Excellent point. I want to kind of interject there, Tom. I think it's more important maybe than you realize, and this is my compliment to you. I think what will happen, and this has already taken place on a cursory scale, when Bitcoin hit around 17,000, I was at the Anarchapulco, or just coming to it. And one of my, followers asked, what did I think? And I said, well, I had said a couple of months earlier that it was going parabolic and it would stay parabolic because the amount of volume that had bought at a certain level had enough momentum to keep it going higher. I said, I didn't know how high is high. But when he asked me at 17, I said, yeah, I think that's about it. It could go higher. And he always wanted to sell in the strength. So he got a hold of me later and he swapped out, I don't know if it was all or not, but his $17,000 Bitcoin and swapped into silver, which was about 17 at the time, if I remember correctly. And, where is he today? I don't know. But that was actually a pretty good swap. So I think there's more that will happen to that. I mean, some Bitcoin holders that will be very wealthy, excuse me, some Bitcoin holders that will be very wealthy will seek diversification and go, gold's that barbarous relic, but you can hold it in your hand. And it is the most untraceable form of wealth, really. And so per unit size. So I think there will be some type of move into gold from some of these Bitcoin, millionaire, billionaire types.
So David, as we were speaking about the, let's say, general economy, can you tell us your thoughts of what the condition of it will be going forward? And specifically, what kind of inflationary environment are you expecting coming into 2021 here?
Well, it's going to be a mixed bag. It's going to be stagflation. There'll be a lot of deflation in areas that are not needed. The bond markets are overvalued so much everywhere. I mean, so overvalued that they're trying negative interest rates, which is, a mind boggler if you're a finance major. I mean, everything's based on the time value of money, and that a unit is going to be worth somewhat less in the future instead of more, but I won't go that far on that topic. I think we're going to see over the next, I'm going to say 5 years, a repricing of the stock market, a complete revaluation of the debt markets, both on the sovereign debt side, meaning government bonds, and on the corporate side, meaning corporate bonds. So the bond market is something I would definitely stay away from at this point, unless you're really sure of the corporation, and what they produce is something that's needed and they're very solid and it does well in a deflationary environment. And then on the inflation side, we are going to see some of this money that's being printed accelerate, and it may not accelerate because of a currency crisis, knowing that all currencies are destroyed, even though that's the most logical choice. I think that the choice will be because of a supply problem in the food system, which means that food prices are going to continue to go higher and higher and higher. And it will be more because of supply issues than inflation. But as we said earlier, or my contention, that most people aren't that educated on economics. All they look at is reality in front of them. And if they know the last time they bought, a loaf of bread, a gallon of milk, and a carton of eggs, it was X, and they go back 3 weeks later and it's 1.2X, it's gone up 20% in 3 weeks, they'll make note of that. They'll call it inflation, and they are going to get concerned, especially something as critical as food. One of the elements taken out of the CPI, which is ridiculous, but that's what the government does. So I think it could be driven by food costs going higher and higher. and people saying, this, I got to do something. I got to buy more food. And then that will drive it even higher. And then people that have savings will say, well, these dollars are depreciating. Look what's happening to food. I better look at an alternative. Oh, Bitcoin's at, 52,000. I don't think I'm going to buy one of those anytime soon. Maybe I'll buy some silver. So I think it will spill over for that reason. What will inflate other than, that, I really don't know. I mean, anything that's needed is going to cost more. Obviously, your foodstuffs, probably some of your building materials. I think electricity or energy is very undervalued. I think you're going to see an increase as we get closer to the energy cliff, where we're going to see more and more demand. Or say, let me rephrase that. You'll see probably lower demand because of what's happened with the devastation of the cruise line industry and the airlines and transportation in general. But that still doesn't negate the fact that we're hitting a situation where energy becomes more crucial. And it's not because of how many dollars it costs for a barrel of oil. It's how much energy it takes to get a barrel of oil. That's the only way to look at it accurately. Anything else is nonsense. I mean, you can print up $1 billion in the time that Congress says, trust us, to, buy more of something until that isn't trusted, meaning that the currency is refused. And this is where we're going. And Bitcoin's a good example that I'm refusing your currency. I don't want it. I want to take it and use it to buy this other alternative to your currency.
Mm-hmm. And something you're hitting on there, David, is the time it takes for them to print, or quote unquote print, trillions of dollars worth of currency. So something that you highlighted recently is that it isn't always necessarily inflationary when they're making all this new currency come into circulation, and it's more due to the velocity of money. So tell us more about how that's going to work.
Yeah, well, I think I did. I'll reiterate it and maybe do a better job. But I think the velocity of money will come in the food sector. That's how I see it. I could be wrong. But somewhere, sometime, and I just wrote about this in the Morgan Report for January, and I've done it a few times. It's a psychological event. It isn't a monetary event. The money's been printed already, more than enough to cause a hyperinflation. It's not moving in Main Street, and it will be moving in Main Street at some point. And when and why, I don't know exactly, but I think food could be a factor. It costs more. The bus ride costs more. Whatever it is, it's costing me more. Look at this inflation isn't, the 2% the government says officially. For my looking at it, the hamburger index says it's 10%, and that's what I'm seeing, so that thinking will catch. It's that analogy of the 100th monkey. I don't know if you've heard of it, Tom, but basically, the few monkeys do wash the coconuts or whatever the analogy is. And then after it hits 100, it hits that tipping point or that critical factor where all of a sudden everybody's doing the same thing. Sort of that way in an inflationary environment. This is what happened. I lived through it, and I know. I was there. I felt it. I felt the psychology. I remember just being, brand new out of college and going to the credit union and buying as much as I possibly could on a signature loan so that I could take that cash and go buy gold. And that's what I did. And I was, one of the few, or younger types that were doing that. But a lot of people were doing that. They were older than me. And it was like that idea that idea moved on its own, so to speak. And I think it'll happen again.
Mm-hmm. A long time ago, you wrote the 10 rules of silver investing. So could you highlight for us a couple of the most important rules to remember at this time, David?
Yeah. Tested my memory. That's good. No,
just a couple that come to mind.
No, I can tell you a few of them. I mean, the number one rule, it goes something like this. No one wants to be a prophet of doom. But in the event of an all-out currency collapse, silver will become the money of the day for day-to-day transactions, not gold, because gold will have too high a unit value to be used in everyday commerce. Therefore, every investor should have access to silver that they can touch going forward in this unlikely event. Another one that I talked about was, start in slowly, know who you're dealing with, start small. I said too much of a good thing is too much of a good thing. You don't need more than about 10%. I've upped that to 20, but suit yourself. I also said if you want to gain leverage in the silver market after you've established a physical core position, you can look to the mining shares. They do a lot for you. It's sort of like buying a golden egg or buying the goose that lays the golden egg. Mm-hmm. If you buy the right goose, the prime project, or you've got 4 or 5 of them in your hen house, now you've got something that's really going to pay a lot of dividends. So that's a way to catch people. If you're sitting there thinking, $27 silver is, I missed it, I could have bought it at 5. On an inflation adjusted basis, with the amount of money printing that we've done, 27 is basically as good a deal as it was at 5 relative to the amount of money that's been printed. Now, let me explain that a little bit. Some people are going, what's he talking about? 27 is a bigger number than 5. Mm-hmm. So you go back to the Great Depression, the lowest price for silver was 22 cents an ounce. When I started the newsletter in 78, 9, silver was around $5 an ounce. Buffett bought in 1999, and at that time it was under $5 an ounce. At $5 in 1999, on an inflation-adjusted basis, silver was the cheapest it's ever been in all of recorded history. So we know $5 is more than 22 cents, but if you account for the inflation, it was actually cheaper. So what I'm saying is we're basically at that same point again, even though most people won't believe it and don't understand it, I still have to say it because silver is very, very undervalued.
Absolutely. So, David, if we see silver, for example, go to $150 an ounce or higher, is there something else that you would want to sell your silver into instead of, for example, the US dollar? Is it more a function of the dollar losing value instead of silver actually appreciating necessarily?
Yeah, it's all about the dollar losing value, really. Where to go is the big question, of course. Usually markets that are overloved, there's ones that are underloved, and you can swap or trade for the new one. So you can get out of something that's overvalued into something that is undervalued. Mm-hmm. And of course, we'll be looking for that. The idea to swap out of a hard currency like silver or gold into a US dollar may be a mistake. We just have to look at it at the time. Now, on a transitory basis, you're probably safe to do it. So you take your 500,000 in silver profits and you move it into the US dollar in your bank account or your CBDC, which is more likely. And then you move that into paying off your apartment building or whatever. So I think on a transitory basis, it's okay. It may be okay to do it. I don't know yet, but history teaches no. You probably would want to spend it directly. So you would probably want to take your silver or gold and purchase whatever it would be, raw land, improved real estate, a business, maybe something in the stock market, maybe a startup, maybe you want to produce a movie. I don't know. But the idea is that you definitely will see it overvalued. And on a historic basis, what is overvalued? And, it's hard to say, but, 150, I will just use that number. On all the inflation, it would have to be around 600, according to shadowstats.com, John Williams' excellent work. But that means that all the funny money that's out there actually stays there, and it won't. A lot of it will disappear. So in a deflationary environment, or this stagflation, I rather call it, because it's a mixed bag. That 150, you're going to have to look at what is the value at that point in time. In other words, like in my youth, if 20 cents bought a gallon of gas, which is, 2 silver dimes, if 2 silver dimes buys, the pump at the gas station, you say, this is pretty overvalued. Maybe it's time to get in the gasoline business or whatever. So.
Yeah. So, David, as we know, you are the silver guru, but do you put any consideration into looking to trade some of your silver for gold at any point when you see a particular ratio in the gold to silver ratio?
Yes, my friend Franklin Sanders does a very good job of that, and I have done it. Recently, I'm swapping out of palladium into platinum. I think platinum's it's broken out of a downtrend. It's finally showing some juice, and it's also getting some pretty good volume. it's kind of hard to find. It's very rare, 15 times rarer than gold. But yes, I do swap back and forth from time to time. I don't do it that often, but yeah, I do. And, when it's always hard. I'm not really that good at it, but if you're patient, it usually pays off. I swapped some gold for platinum a couple times in the last 2 years, and it's basically worked against me right now and probably break even or slightly better. I think this palladium platinum trade is going to work out well over the next 2 years or so. And as far as silver gold goes, yeah, it's a lot easier to, drive down to the coin dealer with a pickup truck full of silver and drive home with a couple of rolls in your glove box. But when you swap back, you take those 2 rolls in your glove box and you need 2 pickup trucks to bring it home. But anyway, yeah.
David, as you mentioned the CBDC or the central bank digital currencies, could you give us a couple more of your thoughts towards that? And could we see them backed by gold and or silver?
Yeah, that's a great question. Well, my thoughts are the banks are trying to catch up with the independent parties that are working on the distributed ledger. I mean, this idea with the cryptocurrencies and the blockchain, I think are here to stay, and the banks are going to adopt it, and they're going to basically nationalize their currencies, in my view. So you'll have the Fed coin, and you'll have South America coin, a Mexico coin, or whatever. I don't think it'll be a Bancor world coin, although it could be. So the adoption that they're taking is coming rather slowly. I mean, Christine Lagarde said something like 4 years is her number. She may have said something more recently that's less time than that. I don't know. I don't follow her that closely, but I do listen. So this is the move. And it's, I wrote about this in the Morgan Report and have been almost consistently for several months. But the push they want is to go to a them only, unbacked, infinite supply digital currency that they can trace tax and without your permission, basically. I mean, you're either in the system or you aren't. And if you elect not to be in the system, good luck. You're not going to be able to buy. And what I wrote in the Morgan Report, I think I'm right. I haven't gotten a lot of criticism against this idea, but I think you're not going to see Bitcoin go away, I don't think. Although the XRP thing was a bit of a shock to me, but I'm not that studied in these things, although we write about it. I have one of my staff writes about it, has for years. But I think what will happen is that you have to be on their system if you want to do anything what I call meaningful. If you want to buy a home, you've got to use the Fed coin. You can't use Bitcoin. Now, there could be a private transaction between 2 Bitcoin holders that you might be able to buy a home. But if you want to get a mortgage, let's say, you've got to use the Fed coin. If you want to get an insurance policy, you have to use the Fed coin. If you want to get utilities hooked up to your house, you've got to use the Fed coin. If you want to get an automobile, you've got to use the Fed coin if you're buying it or releasing it. So you can see where I'm going with this. You want to go grocery shopping, it'll only accept the Fed coin. So anything that is, imperative to your well-being will have to be in their currency. But don't worry, Bitcoin's fine. You can use it all you want. And not that you won't be able to use it. And there'll probably be an arbitrage going on with some entrepreneurs that will say, hey, look, I'll only take a 10% haircut on this thing to give you Fed coin in exchange, whatever. And this will be gray market, black market, free market, call it what you will. So I think that's the direction we're going. I think that and there's a paper I just got to open today. I didn't get to read it before I interviewed Tom from, I believe it's from the comptroller of the currency regarding new regulations. I wrote back years ago my 2 bits about Bitcoin. I said, look, I'm free market. If it works out great, great. But beware, if it gets to be a competitive advantage to the powers that be, watch. They're going to start doing something about it.
So, David, is there anything like a crypto backed by gold or silver that is on your radar at this time?
Yeah, I mean, full disclosure, I am an ambassador, they call it, for the LOAD program. It's AG, that's HTTPS://AG, the silver symbol on the periodic chart. So AG.LOAD, LODE.1ONE. So AG.LODE.ONE. That is it was only silver. It's now gold and silver, crypto backed or gold and silver backed cryptocurrency. And if you go to the website, there's no obligation. Of course, you could sign up for the newsletter. There's no obligation. Learn a little bit more about it. they do a few pretty spiffy videos about it. They use younger, good-looking people, and but the idea is there that it's another way to basically get a different or an alternative currency on your phone, basically, that you can use peer-to-peer or, peer-to-business or whatever. They actually have a virtual debit card already, and I used it again last night, but it's only good virtually. In other words, I wanted to buy something off of an internet vendor, and on the internet it worked just fine, but there is no physical card to go along with it that I could take to, buy a coffee at Starbucks or whatever. So.
Interesting. David, more of your info is available at themorganreport.com and also your YouTube channel. Is there anywhere else you'd like to point any of our listeners?
If you like Twitter, my handle's at SilverGuru22. I usually post most of that stuff myself. I only have a few people who have access to it as well.
Excellent. David, thanks very much for your time today.
Tom, thank you.
This podcast is for general informational purposes only. Nothing on this podcast should be taken as investment advice. Guests on this show are not compensated for their appearance. Listeners are urged to educate themselves and make their own decisions. Do not base any investment decisions on the information contained. To view our full disclaimer, please visit our website.